call is now being recorded. Good morning, friends. Let's continue our discussion on the topic profits and gains from business and profession. So, till so far, we have seen some aspects related to income from business and profession, that is, profits and gains from business and profession. And now, let's discuss some more provisions under this particular source of income. So already we have discussed about this particular points. Expenditure should not be capital expenditure in nature. Expenditure should not be of a personal expenditure in nature. It should this expenditure should have been incurred wholly and exclusively for the purpose of business or a profession of the assessee, and so many other related aspects. For example, expenditure should be related to the relevant year. Uh, Expenditure should not be incurred before commencement of the business. So some of the points were already taken up, and we have discussed a lot on these points. But let's talk about some more deductions or expenses which can be allowed and admissible expenditures under this particular income source under section 37. Irrecoverable advances. If there is an irrecoverable advances because of the given business situation, then it is an allowed expenditure, and this expenditure can be shown on the debit side of profit and loss account and claimed as it can be claimed as a genuine business expenditure. Number one. Number two is forfeiture of security deposit. If a security deposit is forfeited, then this can be allowed as an expenditure. Loss of stock by theft or fire. So if there is a closing stock or stock in go down or in manufacturing point or in the warehouse, and there is a theft or fire to that stock and there is a loss, subsequent loss, then this loss is an admissible loss, and it's a business loss. It's a genuine business loss and can be shown on the debit side of profit and loss account. Number three. Number four, embezzlement of cash and stock by employees. If there is a theft by employees of cash and stock, so it's an admissible expenditure, because when there is a, in every business there is a limit of risk as far as embezzlement of cash and stock is concerned. So this is a genuine business expenditure. It is intrinsic and inherent to any kind of business, and it is allowed as an expenditure in business. Loss due to fluctuation in foreign exchange rates. So if there is a loss due to foreign exchange fluctuations, foreign exchange rates fluctuating, and if there is a loss because of these transactions, then this is a admissible expenditure and a revenue expenditure. Scientific research expenditure. If any expenditure is incurred for conducting or carrying out scientific research, which is essential for the progress of the business or profession or avocation, then that kind of those kind of expenditures are allowed to be shown on the debit side of profit and loss account. Legal expenses to oppose an case. If you are appointing an auditor, advocate or a lawyer who is taking care of genuine business cases, and these cases are in relation to the business to protect the interest of the business, then these are all admissible expenditures incurred for the purpose of the business. Next one, reasonable remuneration paid to the working family members. If any family member is working in the organization and a reasonable remuneration is paid to him, then in such a case, this is a genuine business expenditure and it's allowed to be shown on the debit side of profit and loss account. So in the same way, contribution in the form of subscription, so on and so forth, to professional institutes, trade associations, export promotion councils, which are to get a knowledge or to assimilate knowledge in the area in which this particular business is, and get in order to get business contacts and to build relations. So you are having some subscriptions to professional institutions and other allied uh, subscriptions. These are in the interest of the business. These are genuine, legal, warranted business expenditures to promote business or to protect business or to see progress in the business, growth in the business. Loss by standing as surety to other people connected with the business. So if you're standing as a director, as a director as for a surety to other people for the protection of the business or which is connected with the business, then it is an admissible expenditure. Losses, sales tax, customs duty, excise duty, octroi, professional tax are all admissible expenditures because these are connected with the production of goods, sales of goods, export of goods, manufacturing of goods, and movement of goods within the municipality. So these are all business expenditures which should be shown, which should be allowed, which are admissible as genuine, legal, authentic, related business expenditures, and it needs to be shown on the debit side of profit and account. Now, some more deductions under Section 37 of uh, Income Tax Act 1961 under the head profits or gains from business or profession. Insurance premium paid on animals. For example, is if there is a business and that business into dairy products. So there are animals like buffaloes and cows uh, as livestock. So these livestock are the assets to these companies, so they have to be insured. So if at all, if their life is insured and in this process life insurance premium is paid, then this is a genuine revenue expenditure which needs to be shown on the debit side of profit and loss account. Number two. Number three is transport and marketing charges are also genuine business expenditures. These are required for transportation of goods, transportation of raw material, transportation of manpower, and so on and so forth. Marketing charges, fees to technical consultants. If you are paying fees to technical consultants, uh, and TDS is deducted at source, then and with paid, this TDS is reimbursed to the government within time, then it is an admissible expenditure. Commission for securing orders. So if you are paying commission as a business for the purpose of business and for the purpose of securing business orders, then it's a genuine business expenditure. So these are all allowed as general deductions. Rebates, discounts allowed to customers for promoting the product or for selling the product is allowed as a genuine business expenditure. Expenses for promotion of export trade. So if for the promotion of export market or marketing of exports, you are expending some amount, then it's a genuine business expenditures. It needs to be shown the debit side of profit and loss account. These are admissible like any other general requisite pertinent expenditure. Expenditure for registration trademarks also is allowed. Employees welfare expenditure for amount spent on employees welfare is a genuine business expenditure. Compensation paid to the employees for injury during the working hours if there is a mishap which has taken place in the working or manufacturing point, and this mishap has resulted in a big or a small or minor injury, and you're compensating the employee for this kind of injuries, and this injury or mishap has taken place during working hours, then there is a expenditure in the form of compensation paid to the employee. And when there is a business, there is a chance of mishaps taking place on a intermittent basis, so it is allowed as in business expenditure. Traveling expenditure incurred in connections with the business. So if you're traveling for the promotion of business or improving of the business or enhancement of business, and there is a local tour or foreign tour, and all are expenses which are genuine business expenditures. So let's take some more general deductions under Section 37 of Income Tax Act 1961 under the head profits or gains from business or profession. let's look and take forward our discussion on this particular topic. Diwali and New Year and other expenses. For on the occasion of Diwali, we conduct pujas. During Dasara, there is a Moharat. So New Year celebrations, for example, gifts are given or bonuses are given during Diwali. So these are all business expenditures which are allowed. If you are conducting a puja and for conduction of puja during Diwali or Dasara, so certainly these are all business expenditures related to business. It's to be shown on the debit side of profit and loss account, and there is no limit. Okay, but it should be a genuine reason. Next one, fees for attending business conferences and meetings, guarantee fees, brokerage or commission paid for a loan and finance. This is also periodical payment for the use of goodwill. If there is a payment towards use of goodwill, it's going to be shown on the debit side. The same way, cash shortage found in business at the end of the day. For example, during the whole day, the collection was 1,60,000 rupees, and at the end of the day, it is found that there is a difference of 1,000 rupees. So this is a loss. So this is loss because of shortage. So this kind of shortages are genuine. They are pertinent. They are there is a every chance this kind of shortages are likely to take place in business when the volume of the business is very big. For example, in case of retail industry, like Big Bazaar or Pantaloon, Big Bazaar or DMart, where cash collections are done, and when the volumes of business is very high and cash collections are humongous, so there is a every chance that there can be a likelihood of small difference between what you have collected and what was found at the end of the day. So these are all genuine business expenditures, but we have to remember that it is an admissible expenditure. Legal expenses incurred to alter the articles of association of the company. This is also a genuine business expenditure. Damages paid for failure to fulfill the contract in time is one more expenditure which is allowed to be shown on the debit side of profit and loss account. Amount spent for issue of debentures. So this is also admissible. Damages paid to a worker in order to dismiss him in the interest of the business. Entertainment expenses incurred on opening of a new branch at different places. So at the time when you're opening a new branch, certain entertainment expenditures are incurred, and these are all expenditures which go along the business, and they are to be admitted as a debit as a genuine business expenditure. Audit fees, wages, salaries, directors' fees are expenses. Legal expenses to avoid a business liability, termination of contract, entertainment expenditure, guest house expenditures, damage paid to the customers, presentations, articles or gifts for advertisement purpose. So at the time of launching of a new product or on occasion of a new year, we give presentations, articles or gifts as a means for promoting the product or the company or for as a advertisement. So these are all genuine business expenditures. But now we are talking about some expenditures which are very crucial to be the ones to be remembered once you are uh, having this kind of transactions in your manufacturing unit or in your normal course of business. So these are the expenditures which are not allowed as genuine business expenditures. For example, penalty and damages paid in connection with the infringement of law. For example, you have infringed a law or you have broken the law, you have violated a law, and you are fighting, and they have and the appropriate authorities have imposed penalties, and in this process you have to pay damages. Then these are the expenses not allowed. Fees paid for increasing the authorized capital. So this is capital expenditure in nature, so it will not be allowed to be shown. Number one, donation and charities. Please remember this is very important. Any donations and charities will not be allowed to be shown on the debit side of profit and loss account. Fines paid for breach of provisions of Factories Act. So intentionally or unintentionally, inadvertently or advertently, willfully or otherwise, if we have violated the provisions of a Factories Act or any pertinent act, and thereby the appropriate authorities have imposed fine or penalty for breach of the provisions of Factories Act 1948 or any other related act, then those kind of expenditures will not be allowed to be shown on the debit side of profit and loss account. Number five is expenditure for raising capital. If you want to raise capital by issue of debentures or bonds or so on and so forth, they have to be capitalized. They have to be capitalized and they will fall under the category of preliminary expenses. And we are going to have a separate discussion on the topic preliminary expenses. Preliminary expenses, provision for bad and doubtful debts. So please remember there is a thumb rule. Any provisions, any provisions or reserves or reserves will not be allowed to be shown on the debit side of profit and loss account. Provision for bad and doubtful debts, provision for debtors or provision for anticipated losses, reserve for income tax or reserve for any reserve, because these are the expenditures which have never taken place, and this will be not allowed on the debit side of profit and loss account because the expenditure has not taken place, and there is a every chance that it can be manipulated, and thereby the assessee is likely to deflate the expenditure and thereby try to deflate the profits and tax liability. That's the reason why any provisions or reserves which are shown on the debit side of profit and loss account are not to be shown on the debit side of profit and loss account. Next one, contribution by a company towards erecting a statue of its founder director is not allowed. Preliminary expenditure to explore the possibility of floating a proposed company. So if any preliminary expenses are incurred to explore the possibility of floating a new company, a proposed company, then it is capital expenditure in nature. And please remember, capital expenditure should be amortized or depreciated and not allowed as a revenue expenditure. Only revenue expenditure is allowed, not capital expenditure. Capital expenditure has to be amortized. Next one is provisions in respect of contingent liability. So any liability which is contingent upon happening of a certain event. So that is going to happen. This provision, as already spoken or discussed a while back, provisions are not allowed and reserves are not allowed. So provision in respect of any contingent liability, if at all it is shown the debit side of profit and loss account, has to be reversed, will not be accepted because any provisions or not allowed on the debit side of profit and loss account similar to that of any reserve. And this liability is contingent and the happening of a certain event. So that event has not occurred. So there is no question of allowing on the debit side of profit and loss account. Expenses on shifting of a registered office. If the registered office of the company is shifted and any expenditure is incurred, then it is a capital expenditure and not a revenue expenditure. Difference in trial balance debited to profit and loss account will not be allowed. Expenses already told this one. Personal expenses are not allowed. Like for example, LIC, you live, you are investing in PPF and you are drawing some amount of cash or goods. This is not allowed to be shown on the debit side of profit and loss account. Next one is expenses related with other heads of income. If there are incomes on other sources, like for example, uh, income from other source, at the time of income from other source, if there is an income expenditure for generating that income, then that will be shown under the other head of income, not under business income. Contribution to political parties in the form of donations will not be allowed to be shown on the debit side of profit and loss account. Expenditure incurred by an assessee for the purpose which is an offense or which is but for any purpose which is an offense or which is prohibited by law are not allowed. Okay, so I will not go because any expenditure incurred which is one which is an offense or which is prohibited by law is not allowed. Interest on call in advance, interest on capital account, interest to partners is not allowed. So these are some of the ones we have to remember. These are the expenses which are not allowed. There are I will tell you at least 1,000 such expenditures which are not allowed, and I have taken some prominent among them because it's not possible to discuss all the thousand expenditures. So I've just taken a few of them to make you understand uh, uh, the nature of the expenditures which are not allowed. Now let's talk about some more expenditures which will not be allowed to be shown on the debit side of profit and loss account. This is very, very important. Donations are not allowed. So while doing problem on income from business, so these are the items which you have to remember that they are not allowed. For example, donations are not allowed, charities are not allowed, gifts to relatives. If it is shown on the debit side of profit and loss account, then there is a mistake and you have to reverse it by adding it to a net profit. Income tax is not allowed on the debit side of profit and loss account. Now you can ask me, so I will explain why income tax is not allowed. Okay, so in the previous classes, previous discussions, we have shown that from profit and loss account, we are going to get the residual figure, which is called as net profit. So the main aim of the main aim under the chapter income from business or profession, that is profits or loss from business or profession, is to find out the net profit. So net profit is our basic objective or basic aim, or that is what we want to find out. Because after you find out what is the net profit, for example, you have made a net profit of 50 lakh rupees, so you are going to pay tax on that one, tax. So our aim is to find out net profit. So after you find out net profit, then you are going to pay tax on that one. So you can't show before net profit tax as an expenditure. So that's the reason. Please remember, sales tax is allowed, excise duty is allowed, customs duty is allowed, but not income tax and wealth tax, and as well as advance income tax. Next one, any fines and penalties for breach of any laws. I already told. Salary to owner is not allowed. Capital expenditure is not allowed. One more important point is interest on proprietor's capital is not allowed. Purchase of an asset is capital expenditure is nature is not allowed. Extension of a building is a capital expenditure, so it will be depreciated. Personal expenditure is not allowed. Household expenses are not allowed. Education expense of the children is not allowed. Residential telephone bill is not allowed because it is a bill or expenditure of the household and not pertinent to the business. And already we told that if you want to say that your expense is going to be admissible, then it is admissible on the condition that this expenditure should have taken place exclusively and wholly for the purpose of business or profession and not for personal in nature. Residential electricity bill is not allowed. Amount transfer to reserve, because already I told reserves and provisions are not allowed. Personal hostel expenditures are not allowed. RDD, that is reserve for bad and doubtful debts, are not allowed because this is a reserve. But deduction is allowed for bad debts. Now, why bad debts are allowed? Because uh, see, if you are doing business, there is every chance that there is a embezzlement of cash or goods by the employee. In the same way, when you are doing business and your business is on credit basis, and for example, it's a banking business. So banking business, there can be chances of the loan uh, going into NPS. In the same way, when you have sold your goods on credit basis and the volume of the business is 100 crores, and you are going to collect this 100 crores, but there is a chance that a part of it will not be collected because the person who has purchased these goods may go, uh, he can vanish, and subsequently there could be a loss in the form of bad debt. So when you are doing business, there is a risk of bad debts, and bad debts are allowed, but there are certain conditions to be fulfilled before bad debts can be claimed as bad debts on the debit side of profit and loss account. Personal motor expenses is not allowed. LIC, life insurance premium paid on the owner is not allowed. Any investments are not allowed. So these are the expenses which are not allowed on the debit side of profit and loss account. So for the computation of business income, we have got provisions under section 29, 32, 36 we have seen, 37 we have seen, and inadmissible just now we have seen, and 41 the receipts which are deemed as incomes. So already I told you about these points. Now let's take about some individual items of expenditures, and let's understand them from the perspective of whether to be allowed, how much to be allowed, and other aspects of it. The first point is section 35 of Income Tax Act 1961 under the head profits and gains from business or profession. And the expenditure related to section 35 is expenditure on scientific research. Expenditure on scientific research. For example, see, every company, and in particular, I'm talking about, for example, pharmaceutical companies, drug manufacturing companies, bulk drugs manufacturing companies, or bulk or chemical companies, they have to invest money in research because you want to come out with new products given the requirement. Uh, so research is an integral part of any business activity, whether it is in software, whether it is in automobile industry, whether it is in catering industry, whether it is in transportation, pharmaceutical or textiles or chemicals or any organization. Every organization has got a department called as research and development, where research is carried out to develop new models, new techniques, new products, new manufacturing processes, and so on and so forth. So what I mean to say is, scientific research is an integral part of any organization, and you have to spend a lot as a businessman. If you want to sustain and survive, you have to spend a lot. You have to spend a lot of money on scientific research, and thereby you can sustain and your business is viable. So, with this discussion in background, let's talk about the expenditures on scientific research. Now, scientific research carried on by the assessee. Assessee is the person who is doing the business, in whose name the business is pertaining to his business. So if any research is carried out by the assessee which is pertinent to his business, so that is under section 35. Number one, scientific research means any activity for the extension of knowledge in the fields of natural or applied science in agriculture, animal husbandry, or fisheries. Such research can be carried out and categorized into two ones: in-house research and outside research. In-house means within the business entity or unit where the assessee is carrying out the research. So research is done by the assessee himself in connection with his own business. Research through outside agencies. Now he is not carrying out in the other kind of research. This research is not carried out in-house, but rather there is a contribution made by the assessee to outside organizations which are into the business of exclusively scientific research. So research through outside institutions, any some paid to these agencies by the assessee, and these agencies are in the business of scientific research. For example, Tata Institute of Social Sciences is the one. So if you contribute to this organization by paying amount, then that amount is an admissible expenditure. And this amount, these organizations are engaged in the scientific research to be used for scientific purpose. Now let's talk about how much deduction will be allowed. Let's talk about how much deduction will be allowed under section 35(1)(1). So here there are two types of expenditure. See, uh, before the commencement of period, revenue expenditure is there. So uh, before commencement, whatever is the expenditure incurred for scientific research, and the nature of the expenditure is revenue expenditure. Then only of 3 years prior of to the commencement. So before this point, 3 years, whatever are the expenditures incurred in the form of revenue expenditures are allowed. And revenue expenditure allowed is 100% reduction, provided that these expenditures are prior to the commencement, 3 years prior to the commencement. For example, we have started in the year 2018, but whatever are the previous 3 years, prior years, scientific research expenditure and which is revenue in nature is admissible to the extent of 100%. That is what I mean to say. Only the following expenditures incurred within 3 years, immediately preceding the commencement of the business. So before the commencement of business and go back for 3 years, and if the every expenditure is in revenue expenditure, then it will be admissible, and the following expenditures are admissible. Revenue expenditure of the following in nature: payment of salaries, excluding perquisites. Okay, that you have to remember. To research personnel, people who are working in the research organization, research and development department, and purchase of raw material or materials used in scientific research. Okay, so this is the important one. Now, what about the post commencement of business? Also, there are revenue expenditures which are likely to take place. So, any revenue expenditure incurred on scientific research will be allowed as a deduction, which is a post commencement revenue expenditure. 100% it will be allowed. So, pre commencement period, 3 years before the business starts, number one, and number two, uh, only a few revenue expenditures like payment of salary to the personnel, excluding perquisites, and purchase of raw material used in scientific will be allowed. Whereas in case of pre-commencement, post-commencement, the whole list of revenue expenditures will be allowed. Now, we have spoken just now about the capital expenditure, but there are certain items of capital expenditure also which are connected with the conduction or to carry out scientific research. So, in such cases, what should be the case? What should be the principle on which we are going to show this capital expenditure? So, for for example, what I mean to say about capital expenditure is, see, if you want to carry out scientific research in-house, so you have to construct a building, you have to purchase a land, you have to invest money into the infrastructure, you have to purchase some equipments which are used for scientific research. So these are all revenue expenditures and sorry, capital expenditures. And revenue expenditures is the payment of salaries, etc., etc. So there can be two types of capital expenditures: pre-commence period and post-commence period, before the commencement of the business and after the commencement of the business. So this is the point. 2000 is the year in which we have started our business. So before 2000, year 2000, whatever are the pre-commencement capital expenditure, and after 2000, whatever are the post-commencement capital expenditure. Okay, we are talking about those. So when you are into the business and you are carrying out research, scientific research, there are expenses of this kind. So any capital expenditure will be allowed as a deduction, number one, except cost of land. In the same way, post commencement, any capital expenditure incurred will be allowed as deduction in the same year, except cost of land. Now, note, deduction of pre-commencement period expenditure shall be allowed in the year of commencement of business. For example, before commencement, you have spent some 300 crores, exactly 3 years in during the period from this point to this point. So this will be allowed an expenditure in the year in which the business has started. So 300 crores straight away you can show as an expenditure, irrespective of the fact that it is a capital expenditure, because until such time 3 years we did not have business, and 3 years later once the business has started, so this expenditure of scientific research, which is capital expenditure in nature, is fully allowed as a deduction in the same year. Now, number one. So, deduction of pre-commencement expenditure shall be allowed in the year of commencement of the business to the extent certified by the prescribed authorities or appropriate authorities. So, somebody should certify this is a genuine capital expenditure which has incurred prior to 3 years to the commencement of business, and it has and that quantum of amount has to be certified. In-house research for a purpose not related to the business of the assessee, that expenditure will not be allowed as a deduction. Hope you have understood it. Now there are some in certain expenditures which are incurred uh, in the process of in-house research and development by certain companies. Let's talk about them. So, for example, uh, each specific, these are specific businesses I'm talking about. Companies engage in the business of biotechnology or any other business of manufacture or production of any article or thing which are specified other than those specified in 11th schedule. Okay, we can go and Google what are the specified one in the 11th schedule. Okay, so conditions to be satisfied. The expenditures. So see, what is the main point is whether research and development expenditures are allowed or not, and to what quantum it is allowed as far as revenue expenditure concerned and capital expenditure is concerned, or pre-commencement and post-commencement. So we have a element of doubt in our mind whether research and development expenditure should be shown on the debit side of profit and loss account. The expenditure shall be incurred in-house scientific research facility, including capital expenditure, other than expenditure in the name of cost of building and land. In-house research and development facilities shall be approved by the appropriate authorities. The assessee must enter into an agreement with the prescribed authorities for cooperation in such research and development and other conditions to claim uh, the deductions as far as revenue expenditure related to research and development and capital expenditure related to. Now, in such cases, how much of the expenditure can be claimed? This is very, very important. So, in-house research and development expenditure incurred by certain companies under Section 35 to AB, how much expenditure can be shown as deduction, weighted deduction at a rate of 150% of the expenditure incurred on in-house research and development facilities shall be allowed. For example, you have spent some 100 crores. So you are not supposed to show 100 crores as an expenditure. You are given uh, the approval or authority under this particular section of 35 2AB to deduct 150 crores straight away uh, as an expenditure. If the above conditions are not satisfied, then the deduction can be paid under 35(1)(1). Already we have seen about this. So you can go into the details and get some more extraction as far as this particular where deduction is allowed in any previous year in respect of any capital expenditure under this section, then no deduction under section 32 will be allowed. So we spoke about 32 depreciation. So if you have deducted depreciation, then you will be not allowed this expenditure. Or if you got this expenditure allowed on the debit side, then you will not get a depreciation under section 32. Now, contribution made by the assessee to outsiders. So it's a little bit confusing, but as you keep on practicing, going through the details, you will get a thorough understanding and deep knowledge about this particular sections related to expenditure on research. Contribution on contribution made by assessee to outsiders, related or not related to business. Okay, so you can contribute as assessee to outsiders who are into the who are engaged in the business of or in the activity of doing scientific research, which may be related to your business or may not be related to business. For example, Reliance Industries is there. It is contributing to TISS, that is Tata Institute of Social Science, of 100 crores. So Tata Institute of Social Sciences is into scientific research, and this particular research is not related or related to Reliance Industries uh, business. So if it is contributing to outsiders, then let's see what are the provisions, how much deduction can be allowed as the deduction. So to which institution this company is paying or the assessee is paying, for what purpose this scientific research is carried out, and how much of deduction is going to be allowed. So which institution, any payment to laboratory, national laboratory or university or institute of that is IIT or specified persons under section 35 subsection 2AA. So if the company or the assessee is contributing to the payment to national laboratory or university or IITs, so that institutions are the guys who have got this donation from concerned assessee, for example, Reliance Industries, and the purpose for which these particular agencies are there, that is national authority or university, is scientific research undertaking under taken under program approved by the prescribed authorities, whether related to business or not. So, for example, I told you that 100 crores have been contributed to National Laboratory or Indian Institute of Technology or University by Reliance Industries, and these institutions are for this purpose. So, now how much deduction? This deduction is to the tune of 150 percentage with effect from assessment year 2000. Before this assessment year, it is 150 percentage, but with effect from assessment year 2021-22, it will be only 100%. Hope you have understood it. So we are going to continue as far as in what type of contributions, the nature of the contributions to outsiders is concerned by the assessee. Now, treatment of expenditure on research through outside institutions, and contribution is made by the assessee to the outsider, and the business is these organizations may or may not be related with the business of the assessee. For example, Tata Motors I am talking about. So Tata Motors is making and uh, contributing to contributing a payment, contributing in the form of a payment to a notified research or association or to a approved university or college or institution, and this notified uh, are notified by the central government. And what is the purpose for which it is? It's for scientific research, whether related to business or not. So previously it was what? National laboratory, university or IIT. Now the contribution is towards uh, notified by the central government research associations or to approved university or college or other institutions. So this will be under the same section 35(1) to this was 35(2) AA. And how much deduction? 150% of the original deduction up to finance assessment year 2020-21. Henceforth, from the year 2021-22, it will be only 100% will be shown as a deduction in the same year. Still, we are with some more points. Treatment of expenditure on research to outsider institution is as follows: any payment to a so notified by the central government research association or other institutions. So similar lines, but section 35(1) triple subsection 1, subsection 3, scientific research, whether related to or not. Research in social sciences. Now, please remember, research in social sciences or statistical research, 100% will be allowed as a deduction. No other deduction in respect of the said amount contribution shall be allowed under any other provisions of the act. So you can claim only once, you can't claim many times, and at least only one time and not at least one time. So only once you are allowed to show. Now, treatment of expenditure on research through outside institution is as follows. So national laboratory means a scientific laboratory. So I talked about national laboratory, the very first point. So what do you mean by national laboratory? National laboratory means a scientific laboratory functioning at the national level under the aegis of ICAR, Indian Council of Agriculture Research, Indian Council of Medical Research, Council of Scientific and Industrial Research, Defense Research and Development, uh, Department of Electronics, Department of Biotechnology. So these are all sophisticated agencies, and you are making a contribution to this. Okay, hope you have understood these points. So you talked about such associations, universities, colleges, or institutions must be approved in accordance with the prescribed guidelines and other aspects. So hope you have understood all these points. Now there are certain investments which can be done in specified businesses which we allowed as a and only capital expenditure are covered under section 35 AD other than land, goodwill and financial instruments. So if you are investing in these kind of businesses, capital expenditure except land, goodwill not be allowed to be shown, but otherwise all the capital expenditures will be shown as expenditure in the year in which it has been incurred. So this is the methodology we have to follow. I will skip this one. Now, expenditure on agriculture extension projects. This is under section 35CC. So, if expenditure is incurred on agriculture extension projects by the assessee, expenditure on agricultural extension projects. So, if you are into the business of agriculture extension projects and you are expending an amount on it, then deductions 150% of such such expenditure, except land and building. Who are the eligible assessees? Any assessee can claim this deduction. That is expenditure on agriculture extension project. Project shall have a prior approval of the Ministry of Agriculture, Government of India. Conditions to be fulfilled for approval of agriculture extension projects and other related conditions have to be followed. The agriculture shall exceed rupees 25 lakhs. Next one is contribution for rural development program. So if you are contributing as an SHC who is into the business or a profession, then if any contribution for rural development programs are there under section 35 CCA, you can claim as a deduction. That is, any sum paid to the following is eligible for 100% deduction under section 35 CCA. Association to be used for carrying out rural development. So the main emphasis is on will be on rural development programs. Okay, so hope you understood this point. Now, in the same way, if the company is carrying out or the associate is carrying out, the business unit is carrying out expenditure on skill development projects under section 35 CCD. So any expenditure on skill development projects, 100% plus 50% of such expenditure will be allowed, except land building, except the cost incurred towards land and building. Eligible assessee can be a company. Expenditure should be incurred on public-private partnership project for skill development in the IITs. And so these are all the ones you can just ignore or just keep in mind. Now we are going to talk about the most important part of our discussion, which is relevant to preliminary expenses. Now, so many preliminary expenditures are incurred, and there is no business at the time when preliminary expenditure is incurred, or there is no revenue, no profits. So there are expenses which are already incurred. Now, how should I claim as an assessee these expenditures, which are preliminary expenditure in nature? So any preliminary expenditure is incurred, we have to just find out the total amount of expenditure, preliminary expenditure under section 35D, and it is to be amortized over a period of 5 consecutive years at the rate of 20%. For example, if the preliminary expenses are to the tune of 200 crores, so from the year in which the business has started or commenced, you can start deducting these 200 crores, that is the preliminary expenses incurred previously or prior to the business commencement of business, and this 200 crores can be amortized over a period of 5 years from the date of from the year of commencement of business. So for 40 crores first year, second year 40 crores, third year 40 crores, fourth year 40 crores, and fifth year 40 crores. Now for this we have to understand two concepts. Two concepts or two definitions. One is the cost of the project and one is the capital employed. What do you mean by cost of project? To find out preliminary expenses. To find out the meaning of the word cost of project is actual cost of fixed assets. For example, I'm talking about there is a big project the company is coming out. The company is coming out with a new factory or a new project, we call it. So what do you mean by new project? New project is nothing but actual cost of fixed assets. It is land, building, plant and machinery, furniture, fixtures and related aspects. In the same way, capital employed. Now we have on the liability side of balance sheet some items. If we total those items, we'll come to know what is the capital employed by the company in the business. When I'm talking about capital employed, it refers to aggregate of issued capital, issued share capital or equity share capital issued or debentures, long-term borrowings on the last day of the previous year in which the business is commenced. Now, why this is important? Because to find out the total amount of capital expenditure which is eligible for, we have to know the definition of cost of projects and capital employed. Now, what are the items which are allowed as preliminary expenses? So, what are the list of items under capital expenditure? These are the list of items under capital expenditure. Okay, hope you understood. In case of a new company, expenses for setting up of any new business. In case of a existing company, so there can be two types of companies: new company and existing company, which is going for a new project, and there is a preliminary expenses. So, for the purpose of understanding capital expenditure, how much is what are the items which you fall under the purview of preliminary expenditure? We have to categorize the companies into two categories. One is new companies and one is existing companies. So new, in case of new companies, expenses for setting up of any business. In case of existing companies, expenses for expansion of the business. So certainly I want to expand my business. Expenditure on preparation of feasibility reports. So there is an expenditure incurred for finding out whether this particular project is feasible or not. Project reports, conduction of market survey or engineering services related. All these aspects like legal charges for drafting any agreement, legal charges for drafting of memorandum of association and article of associations of the company. So many expenditures are incurred for drafting memorandum of association, articles of association, and we have to pay legal charges because there are some legal aspects which have to be covered, and it requires expertise. So printing charges of memorandum of association and articles of association of companies, expenditure on public issue of shares and debentures. So if the company is about to start, so you require money and you float a IPO, and the IPO is related to public issue of shares, and there is expenditure incurred. So you are coming out with the issue of debentures. So underwriting commission has to be paid, brokerage charges have to be paid. So many expenditures are incurred, and all this put together before the business commences, there is a preliminary expenses. So now there is a ceiling as far as how much can be the preliminary expenses which is admissible. For example, here it is written how much is the maximum amount of preliminary expenses which is admissible. In case of Indian companies, higher of 5% of cost of capital or capital expenditure. Number one. Any other assessee apart from Indian company, it can be 5% of the cost of the project. So in case of Indian companies, it is high 5% of the cost of the project or capital employed. So I told you in the previous slide what do you mean by cost of project and what do you mean by cost of capital employed. So I will just give a small example, a numerical example to make you understand what we are talking about. For example, a company, there is a new company which is coming, or a existing company is coming out with is planning for expanding their business, and these are some of the expenditures incurred. Okay, so before the commencement of the business, there are so many expenditures which are incurred, and all these expenditures are called as revenue expenditures. Okay, assuming that this company has incurred some 500 crores towards preliminary expenses like drafting of MOA, drafting of AOA, legal charges, project reports, conduction of surveys, public issue expenditure, bankers to the issue, registration, merchant banking activities, so on and so forth. 500 crores. Now, will these 500 crores be allowed to be shown on the allowed as preliminary expenses, which is going to be amortized over a period of 5 years? Let's see. So this 500 crores will be admissible, but we have to compare this 500 crores with this one. That is higher of 5% of cost of project and cost of capital employed. Now, assuming that the cost of project is some, for example, 5,000 crores cost of the project. I told you land, building, plant, and machinery. And on the other side, capital employed in the business, which is equity share capital, debentures, bank loans, is employed is some 7,500 crores. Now you have to calculate 5%, which is 250 in this case, and in this case it is 375. So among them, whichever is high is 375 crores. This is allowed. Now compare this one with this one. So this is not allowed. This amount will be allowed as an expenditure. And this 375 crores, which is preliminary expenses, will be allowed to be shown as a capital preliminary expenses over a period of 5 years from the date of commencement of business. That is 375 divided by 5 is equal to 75 crores for the first year, second year 75 crores, third year 75 crores, fourth year 75 crores, and fifth year 75 crores. So hope you have understood this particular discussion as far as preliminary expenses are concerned. So how to remember 2 points. That is, one is cost of project and cost of so another one is capital employed 5% you have to calculate. That is the maximum which is allowed, and after you have found out that, you have to compare with the actual preliminary expenses, among them whichever is the lowest, that will be the admissible preliminary expenses, and that admissible preliminary expenses will be allowed to be amortized over a period of 5 years from the date of commencement of business activity. Hope you have understood this. Next one, amortization of compensation paid to people who are opting for voluntary retirement scheme. Voluntary retirement scheme. So there are some voluntary retirement schemes which are floated by organizations. So a huge amount of money has to be paid or to be reimbursed to, or in the form of compensation, who are opting for, to those employees who are opting for VRS, voluntary retirement scheme. So it's a bulk amount. It's a bulk amount which is capital expenditure in nature. So you can't show this amount cannot be allowed to be shown in a single shot, uh, and whatever amount is incurred towards the compensation for those guys who have opted for VRS can be deductible over a period of 5 years. Hope you have understood this. So, what is the eligible expenditure? Payment of such money to the employees. For example, Reliance Industries has come out with a VRS, and some X number of employees have opted for this voluntary retirement scheme, and the company has paid to those people who have opted. The voluntary retirement scheme was 2,000 crores. How much? 2,000 crores. Now, this 2,000 crores will not be allowed to be shown as an revenue expenditure in the same year. It is going to be divided into 5 years. So every year you are going to be allowed to show a expenditure in the nature of compensation paid towards under VRS. So this is the point. The first installment is deductible in the previous year in which such amount is actually paid. So hope you have understood this particular point also. Now let's take about some more expenditures under section 31. So insurance premium paid on. So if any insurance premium is paid on stocks or stores against risk of damage or destruction, is allowed as a revenue expenditure. Any insurance premium is paid for the life of the cattle owned by the members of a primary milk cooperative society will be allowed. If any insurance premium is paid for the towards the protection of health of the employees, will be allowed. Bonus and commission paid to the employees will also will be allowed. The same way, interest on borrowed capital for business also will be allowed. But interest for the period after the asset is put to use is allowed as deduction. Interest payable for the period before the asset is to be put is to be capitalized. So if an asset is not there, but you are constructing and you are paying interest on that one, so the total cost of construction includes the interest payable on this particular construction of a asset, and this is capital expenditure in nature. Now, interest on borrowed capital for business. So let's look at this item. How much deduction? What is the nature of the deduction? Whether allowed or not, and many related aspects. Many related aspects. So hope you have understood up to this stage. So let's talk about interest on own capital is not allowed. Interest on own capital is not deductible. Number one. Number two, guarantee interest paid to the shareholders on paid up capital is not allowed. Not deductible. Guaranteed interest paid. So interest paid on money borrowed for payment of dividends. So if an organization has declared a dividend and they are running short of money, and they have borrowed money for the purpose of uh, honoring the payment of dividends, it is deductible. Nobody can deny it. Interest paid on money borrowed for payment of tax. If you want to pay tax and you're running short of cash or liquidity, and you're borrowing money or loan for the payment of tax, then if you are paying interest on such kind of borrowings, it is not allowed to be shown on the debit side of profit and loss account. So many points are there, so many expenses are there. You should know the element of um, uh, whether the nature of expenditure is allowed or not, and all those aspects. Interest paid by a firm to partners is deductible. However, interest paid by association of a person to its members is not deductible. Okay. Next one, we will skip that one. Next one is employees' contribution. So employees contribute to employees' provident fund. So their contribution is an expenditure, and naturally they should be allowed to be shown as a deduction and under Income Tax Act 1961 under the head of income, profits or gains from business or profession. So employees' contribution to recognized provident fund, approved superannuation fund, or allowed pension scheme to the extent of 10% of salary of the employee is allowed, contribution to approved gratuity fund. So these are all the contributions made by the employer is a genuine business expenditure which is to be allowed on the debit side of profit and loss account. So these are all to be remembered. They are very, very important. You just can't ignore any one of them. Bad debts. So once you are in the business, there is a risk of bad debts, and bad debts have to take place, will take place, and continue. Business will continue, will strive to continue, will thrive to continue, and we have to find out the rule. So bad debts is an integral, inherent uh, process in business, and uh, it's a genuine business expenditure because when you're in business, there is element of business loss due to bad debts. So these are all allowed, but except provision for bad debts, because I told you provisions and reserves will not be allowed. So debt must be incidental to the business. So first and foremost, loan which you are giving, or if you are selling goods on credit basis, so these are incidental to the business. So naturally, there is an element of risk into it. Such bad debts must be charged as an income in computing the income if the assessee of any must be written off in the books of accounts. Debt may be lent, may, debt may be money lent in ordinary course of business. Recovery of bad debts is taxable as business income in the previous year. If previously, very important, this is very important. If in the previous year you showed that there is a bad debt of some 5 crores, and the next year it so happened that the guy who has dishonored this payment came surfaced, and all of a sudden he paid some 2.5 crores. So previously, as this was shown as a loss, now this is an income and it should be shown on the, it must be, it should be, it needs to be shown on the credit side of profit and loss account. Next one. Next next element of expenditure is uh, expenditure on family planning. Expenditure on family planning. So companies take up expenses on family planning, and there are two types of expenditures which are incurred under the head uh, family planning. So one is revenue expenditure. It is allowed to be deducted in the same year. Capital expenditure will be amortized over a period of 5 years. Security transaction tax will be allowed. Commodities transaction tax will be allowed. So these are, so conditions for allowance. So what are the conditions for allowance of expenditure? These expenditures should not have been covered under Section 32. Such expenditure shall not be covered under Section 32, 36. These expenditures which are allowed should not be kept capital expenditure in nature, and this expenditure incurred should be incurred in the previous year. There should be revenue expenditure in nature. The expenditure should be incurred wholly and exclusively and thoroughly for the business and not a personal expenditure. So all these have been adequately discussed. Now the most important point of our discussion. This is very, very important, and you need to remember it. You need to remember it. You just can't ignore it. When expenditures, there are some important decisions based upon law, and these are not allowed as an expenditure. Many of the items are not allowed as an expenditure. So first one is penalty imposed for infraction of law. If you are violating law, or there is an infringement of law, or you have thoroughly broken the law, you violated the law, then any penalties levied will not be allowed. Penalty paid for failure to deduct tax at source. You are responsible to deduct tax at source on various incomes, and if you have failed to deduct tax at source, and subsequently the income tax department has levied a penalty for the failure to deduct tax at source, this payment will not be allowed to be shown as a expenditure or a loss or a penalty on the debit side of profit and loss account. Any penalty, any interest on penalty under that clause is not allowed. Interest paid to sales tax department on arrears of sales tax. So if you have not paid sales tax, uh, there are some arrears of sales tax, and the sales tax department has imposed interest on that, then it is allowed. Okay, because you did not know that there was calculations done by the sales tax department, and they found out this is the arrears, and they are naturally going to ask to pay this one as well as this one. So they are genuine business expenditures, nothing hiding in it. Penalty levied under CST Act. If you have violated some acts of central sales tax, then the penalty will be levied, and this will not be allowed to be shown on the debit side of profit and loss account. Next one, demurrage paid to port authorities for releasing confiscated goods, allowed as it is not a fine. Demurrage paid to port authorities for releasing confiscated goods. So it is allowed, it's not a fine. Interest paid under employees provident fund and others is also allowed. Okay, so you remember all this. So expenditure incurred on key man insurance policy by the company, by the business assessee also is allowed as in business expenditure. And most important one, this is very important one, any contribution to political authorities, political parties, sorry. So if any contribution is made by the business assessee, businessman or assessee uh, to the political parties, then it is not allowed as a deduction. So what are these contribution? Contributions are any expenditure on advertisement in any brochure, souvenir, tract, pamphlet published by political authorities. There is a magazine or brochure of a political authority, political party, and Reliance Industries is XYZ is coming out with a advertisement in this particular uh, brochure of a political party, then this is not an allowed expenditure. However, it can be claimed as deduction under section 80 GGB, 80 GGC as donation to political parties. This is also very important, very important. Interest, royalty, fees for technical services. If somebody has provided you some technical services and you are paying to him the fees for such technical services, or royalty for such technical services, or interest to such technical services, then it is allowed only on the condition that tax is deducted at source when the payment is done. If the payment is done without tax deducted at source, then it will not be allowed to be shown for expenditure on the debit side of profit and loss account. This kind of uh, tech, interest, royalty fees, and payable outside India or paid within India. Conditions for disallowance. So when is this interest, royalty fees for technical services not allowed? Tax is not deducted before the end of the financial year, or tax is not deducted. Tax is deducted but not paid to the concerned authorities, income tax department, before the filing of income tax returns. If you fail to pay the tax deducted source which you have collected from the ones, then if you don't reimburse it or pay to the appropriate authorities before the date of filing of income tax returns, and then such amount will not be allowed. So 100% of such amount payable will not be allowed in the above conditions. Payment to relatives. So payment to relatives, payment towards the expenditure is done to a related person, and the above such payment is made according to and in the view of assessment is excess or unreasonable, then such expenditure will be disallowed to the extent to which it is found to be unreasonable or excess. So what are the relatives? So what do you mean by this particular topic? This particular topic says that, for example, Mr. X is working in is a director of a particular company, for example, Swayam Company Limited. So something like that. And this guy is also into the business of a particular material, which is the raw material for this company, and the raw material is procured from this director. So there is a element of what do you call interest in this business. So he will certainly, this guy will be paying more. So can be element of interest. So such kind of uh, business transactions are going to be closely monitored by assessment officers. So these are the meaning of relatives. For example, in case of an individual, the guy who is paying is the payer. Payment is made to the payee, and the individual, and this guy is a relative. So, for example, in case of company, that will be most appropriate example. Company is there who is paying to a director some payment to relatives of the director. So these are all payments to relatives. So the assessing authority should be genuinely satisfied before allowing such payments as an expenditure. Now, this is very, 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 very important, and we are going to take up some numerical examples on this particular topic. Now, see, it is expected that when you are expending money on a particular expenditure item, it is expected that it should be paid in cash. It is expected to be paid uh, in in a bank through a bank transaction. And if at all if it is not paid, then there is an element of doubt. There is a element of doubt. To overcome that, we have provisions under this particular uh, Income Tax Act. For example, for example, in this case, uh, this particular chapter topic gives you a wide understanding about payments in cash other than account pay checks. So let's take about the topic. This is very important. You have to pay your attention because this is really an very important uh, topic. Very important topic. So here, an assessee incurs an expenditure exceeding uh, exceeding rupees 10,000, which is deductible. So under head of income, profits and gains, number one. Number two is a payment or aggregate of payments made to a person in a day for a expenditure exceeding rupees 10,000. But in case of in case of plying, hiring, and leasing of goods, this payment can be 35,000. Above payment is made other than by account pay check or draft or internet banking. Then such expenditure will not be allowed to be shown on as business expenditure. Will not be allowed. So conditions for disallowance. So payment in cash other than account pay check, draft, and internet banking are disallowed under these three following conditions. And the last condition is very important. Assessee incurs this expenditure exceeding rupees 20,000, more than 10,000. Sorry, if any expenditure is taken place which is more than 10,000 and which can be allowed as an expenditure under the head income from business or profession, and number two is an payment or aggregate payment made to a person in a day for an expenditure exceeding rupees 10,000, and this is 35,000 in case of payments made for plying, hiring, and leasing of goods and carriages. Number two, and all these above payments are made other than account pay check, draft, or internet banking. So these expenses of more than 10,000 rupees is paid in the form of cash. That is the meaning of this. If any expenditure is paid in the form of cash, which is more than 10,000 rupees, and it will not be allowed. But in case of the business of plying, hiring, leasing goods carriages, it can be up to 35,000. More than 35,000, if it is paid in cash, it is not allowed. and a payment or aggregate payment in made to a person in a day. In a day to a person, if you are making a payment of more than 10,000 in cash, it is not allowed. So let's take a small example. Okay, just I will give you one small example before I run through the other slides pertaining to this particular point. For example, Mr. X is there who is employed in a company, who is employed in a company, and he is drawing a salary of 40,000 rupees. And the company for the month, for a particular month, paid this 40,000 rupees in cash. So, first condition is assessee incurs an expenditure exceeding 10,000 rupees. Yes, number one is satisfied. Number two is this salary which is paid. This guy is willing to take this expenditure on the as an expenditure of income, expenditure of business. Number two. Number three, a payment or aggregate payment made into a person in a day exceeds rupees 10,000. So this guy is making a payment of more than 10,000 rupees during that day, and this payment is made in cash, not by account paycheck, draft, or internet banking. So that if this is the case, then this particular expenditure is not allowed on the debit side of a profit and loss account. Hope you have understood it. So this is the point. Now let's take a small. We have some good number of examples to explain this particular point. Let's take one by one. Let's take one by one. The first case. The first case is numerical problem, payment in cash other than, okay, determine the amount of disallowance. Generally, Mehta and company pays salaries to its employees by account paycheck. So this is a company which is following the practice of paying salaries by account paycheck or through bank draft or by internet banking. So salary of April 2019, however, is paid to the four employees ABCD by bearer check. So bearer check means it's almost like cash, and the bearer check is paid to whom? A, B, C, D. So in this first case, 4,000 to A, 6,000 to B on that day, 10,500 to C, and 13,500. So I told you, if the payment to a particular person in a day is less than 10,000 rupees, it is allowed. So this payment of salary to A is allowed, B is allowed because this is less than the threshold limit of 10,000 rupees. This is allowed. But whereas this 10,500, which is more than 10,000 rupees, is paid to C as salary, is not allowed as an expenditure. The whole amount will not be allowed to shown on the debit side of profit and loss account. In the same way, payment to D, which is more than 10,000 rupees, which is paid in cash on a particular day. On a day, you remember this point, in a day, into a person. So this is also is not allowed. Next one. Second example. Generally, Mehta and company pays wages to laborers by account paycheck. However, in the month of October 2019, there were three laborers PQR to whom the payment was made by bearer check, that is almost like a cash. So 9,000, 11,000 and 16,500. So this is less than 10,000, so it is allowed. This is less than, not less than 10,000, it's more than 10,000. This is also more than 10,000. This is not allowed. Hope you understood this particular point. Third case. The third case goes like this. Mehta and company brought raw material on credit basis from Solanki Limited on 25/10/2019 for 2,76,000. So this payment was done partly on 26/10, partly on 5/11, partly on 1st January, and partly on 1st February, and partly on 1st March. So let's look at different dates and what is the mode of payment. So 7,000 is paid in cash to this person only once in a day. So this is allowed because the payment is made to only this person, and this person payment for the whole day is less than 7,000 rupees. It is acceptable. Rupees 5,000 by bearer check on a other day to the same person. So this is also allowed because less than 10,000 rupees. Next one is 55,000 rupees on the other day by bearer check. So this amount is not allowed because this is more than 10,000 rupees. So the whole amount is not allowed. Fourth one, 65,000 payment on 1/10/1/2/2020. This is allowed because this is paid by demand draft. And last one is the remaining amount, whatever is the balance is paid on the other day, that is on 1st March through internet banking. So I told you, cross check, account pay check, cross check, or demand draft, or through uh, internet banking, it is allowed. So you can have your own your views on the other aspects based upon the discussion just now we had. Now let's talk about some more expenditures. So some expenditures are there which can be paid in cash more than 10,000 rupees and which are allowed as an deduction. So more than 10,000 rupees you are paying the expenditure in a particular day to a particular person, and this is more than 10,000 rupees that payment is towards a particular expenditure, and on top of it, it is paid in the form of cash rather than on by demand draft or internet banking or by account pay check. In spite of that, despite that fact, we are going to allow them this expenditure done by this particular assessee. So payment made to banks is allowed. For example, Mr. X goes and pays to State Bank of India 50,000 rupees, deposits 50,000 rupees, or pays penalty or something like that. Some payment is done. For example, interest payment or installment, loan installment, it has paid in the form of cash. So this is allowed because it is paying to the government banks. Payment made to governments is also allowed. Payment through banking system is allowed, even though the threshold limit it crosses the threshold limit of 10,000 and the payment is done in cash. So payment made to cultivators, because the cultivators, grower or producer of agriculture, forest animals, so on and so forth, these people don't have accounts. So these people urge to have the payments to be made in cash. So if any payment is made to this kind of people, more than 10,000 rupees also is acceptable and it can be shown on debit side of profit and loss account. So payment to the producers of goods in cottage industry, which is run without the aid of power, and the payment is made in cash more than 10,000, it is allowed. Payments made at the place which is on the date of payment is not served by bank. For example, there is a problem as far as a particular day there is a strike in the bank or something has happened, so the payment has to be made, but now the bank is closed or there are there is no banking operations, and in such a case if it is proved that because of this reason is making the payment by cash, it is allowed, but there should be a proper uh, conditions to be followed. Any terminal benefits like retirement benefits or gratuities less than 50,000 is acceptable. Payments to employees on temporary posting for a continued period of 15 days. So these kind of things are allowed. So I have mentioned a list of items on which this particular rule of 10,000 paying in cash is not related. So they can be paid in cash more than 10,000 also. Now today we are going to talk about some. Uh, let's take some numerical problems on the topic income from profits or gains from business or income. So let's read out the problem. Let's go through the problem and we will solve one by one. Solve one by one. So this is an information related to Mr. Vijay, who is having a business. So salaries, conveyance, interest on loan, interest on proprietary capital, rebates, wealth tax, interest and penalty on wealth tax, traveling expenditure, depreciation, life insurance premium. So these are the expenditures which are given on the debit side of profit and loss account. There are incomes like dividend from Indian companies, gift from father, dividend from cooperative banks. This is the profit which he has made. And apart from this, there is an additional information which has been furnished by the assessee, who is the who is Mr. Vijay in this case. Depreciation as per profit and loss account, as per income tax is 40,000. Now let's look at how much this guy has claimed. See, he should have claimed 40,000 as an depreciation. But how much he has claimed? 35,000. So he has shown less in expenses in comparison with the original, which are allowed under income tax rules. So this is number one. Number two is traveling expenses includes expenses of visiting his native place. So if he's visiting his native place, this expenditure, which is traveling expenditure here, is personal in nature. It has no place on profit and loss account debit side. It should not be shown on the debit side of profit and loss account, and it is shown. So this is wrong. Medical insurance premium paid for his wife's life insurance, medical insurance, and it is paid by check. So this is personal in nature, and this expenditure will not be allowed to be shown on debit side of profit and loss account. So this uh, for 15,000 will also not be shown on the debit side. Will not be allowed to be shown on the debit side of profit and loss account. So there are some grave mistakes which are committed in the preparation of this profit and loss account. So we have to rectify this profit and loss account, and we have to uh, come out with the right net profit by applying the right rules. So let's talk about one by one. So salaries, it is allowed, no problem. Conveyance, it is allowed. Interest on loan, it is allowed. Interest on proprietor's own capital, this is not allowed. So this is an expenditure which is not allowed on the debit side of profit and loss account. So it should be added back to profit. It should be added back to profit. Number one, wealth tax. I told you wealth tax is not allowed. It is not allowed. These are expressly disallowed, and it should not be shown on the debit side of profit and loss account. It should be added back to profit. This is number two. Interest and penalty on wealth tax. So this is also not allowed. Not allowed. It should be added back to profit. Traveling expenses, it is allowed. Depreciation, but however, depreciation should have been 40,000 in place of 35,000. So this 5,000 is the additional expenditure he should have claimed. So it should be deducted from profit. It should be deducted from profit because there is an expenditure uh, which is less than the expected expenditure or expenditure which is pronounced by income tax rule. So this 5,000 extra expenditure should be shown, which will decrease the profit. So to decrease the profit, we have to deduct the depreciation to the extent of 5,000 rupees. Life insurance premium. So life insurance premium is on the life of the owner, which is personal in nature. So this is a personal expenditure in nature. It should not be shown on the debit side of profit and loss account. It should be then added back. Not allowed and added back. Not allowed and added back. Now, this is allowed. So, staff welfare expenses are genuine business expenditures. Advertisement is a genuine business expenditure. Net profit. So, this is the wrong profit, and we have to make some adjustments to this wrong profit to arrive at the right profit on which tax has to be paid. So, this is the debit side of profit and loss account. Now, let's talk about the credit side. This is dividend amount received from an Indian company. So this is income from other source. Incomes which are from other sources should not be shown on the credit side of profit and loss account. So this is not allowed to be credited. So it should be deducted from profit. I told you all these ads and deductions in my previous session. Gift from father. This is income from other source. It doesn't have a place in profit and loss account on credit side. So this should not be allowed, not allowed, and it should be deducted. It should be deducted. Number three. Number four, by dividend from cooperative banks. This is also not allowed because this is income from other sources. And this we have already discussed. So this traveling expenditure out of 27,000, 8,000 is not allowed because this is personal expenditure in nature. So this should be deducted from profit. Mediclaim in this life insurance premium, there is a mediclaim also to the extent of 50,000. So this 15,000 is personal in nature. So this personal expenditure should not be shown on the debit side of profit and loss account. Now let's put it in a right format and solve the problem in a predetermined format. So first is what is the net profit? 5,20,000. So there should be three columns here like this. In the outer column, the third column, you have to show that net profit as per profit and loss account. Now, first heading is personal expenditure. Under personal expenditure, so this is an add item. This the below ones are the less items. Means items which have to be added, items which have to be deducted. And these are the headings under add. The headings are, in this particular case, there are personal expenditures which are shown and expenses expressly which are not allowed to be shown, but here shown. So this is the heading 2. In the case of incomes, the heading is incomes which should not be shown on the credit side of profit and loss account, but he has shown. So he has made a grave mistake. Number next. Next, another heading under deduction is expenses in deficit of the allowed amount. For example, you should have shown 40,000, but he has shown only 35,000. So this 5,000 should be deducted from profit. So these are the heads under adds, and these are the heads under deductions. So first, personal expenditure, traveling expenditure to his native place will not be allowed. Medical expenses of medical insurance premium paid to the medical policy of our wife is not allowed. So total put together is 23,000. So this should be in the first column and the total should be in the second column. Expenses which should not be allowed to be shown on the debit side of profit and loss account, but it has been shown by mistake or otherwise. So it should be added back to profit. This is the heading. So interest on own capital will not be allowed. Number 2 under this head. Wealth tax is not allowed on the debit side of profit and loss account. Should be added back. Interest and penalty on wealth tax will not be allowed on the debit side of profit and loss account. So it will be added. Life insurance premium on the is a personal expenditure. Okay, this should have come here. Okay, so this is not allowed. So this total put together is 58, 58, 70 and 89. So these two are not allowed, and that these two totals to 1,12,000 rupees. So to 5,10,20,000, you should add 1,12,000 rupees, which should not be shown on the debit side of profit and loss account. Hope you have understood up to this stage. The next point. Next one is incomes which should not be shown on the credit side of profit and loss account. Incomes which should not be shown on the credit side of profit and loss account. Less items, incomes which should not be shown on the credit side of profit and loss account should be deducted. That is, dividend from Indian company should be deducted because this is income from other source. By gift from father, this is income from other source. It doesn't have place in profit and loss account. So credit side, it should be deducted. Dividend from cooperative bank, this is income from other source. It should not be shown on the credit side of profit and loss account. If it is shown, it should be deducted. So these three items, if you add, it will be 70,000 rupees. Now D item under, that is fourth heading under less items. So total there are 4 headings under less. D is the main heading. Expenses in deficit of the allowed. So depreciation which was supposed to be allowed was 40,000, but he has shown on the debit side only 35,000. So he should have shown this much. So this should be less. This amount of difference amount of 5,000 should be deducted, because this expenditure is less and this is increasing the profit, and that's the reason profit se nikalna padega. Yeah, we have to deduct it from profit 5,000 rupees. So 70,000 and 5,000 should be deducted. So minus 75,000 should be deducted from this one. So 5,20,000 plus 1,12,000 is equal to 6,32,000. From 6,32,000, if you deduct 75,000, you will get the right profit, which is 5,77,000. So look at the old profit and look at the right profit. So the old profit was 5,22,000, which is wrong, and the right profit is 5,77,000 by doing all sort of adjustments. Thank you so much. We will take up some more numerical problems in our next session. Thank you so much for your patience listening. Have a great time. And if you have any doubts, you can get back to me. My WhatsApp number is there with you. And thank you so much for your patience listening. God bless you. Bye.